Thank you for watching this video. Today we will be doing technical analysis on the stock market for Thursday, December 17th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. We're going to start off with the S&P 500 here today, and each one of the four charts we're going to look at is a 2-month, 1-day chart. On each one of these charts, each candlestick is going to represent 1 day of trading. On the S&P 500, we were up 58 basis points today and closed at a new all-time closing high at 3722.48. So we've had a nice 3-day run now in the S&P 500, where the S&P 500 has been positive. And we're closing nicely once again above this 3,700 level in the S&P 500. And with today's close of 3722.48, this is now the third time in the history of the S&P 500 with a close above 3,700. Yesterday was the second day, and the very first time that ever happened where we closed above 3,700 on the S&P 500 was back on December 8th, as we can see right here. I do want to point out the significance of the 3 positive days in a row on the S&P 500. Guys, this is the first time that's happened since the first week in November, where we had 4 positive days in a row. Since then, as you can see here, we had a positive, negative, couple positive days. So we've only been able to stitch together 2 positive days in a row since the beginning of November until these last 3 days. So we had 4 negative days in a row, and now we've had 3 positive days in a row, and we're closing nicely back above the 3,700 level. And of course, on the back of yesterday's Fed news conference, where basically they're still going to be extremely supportive of the economy, the markets, as we might expect given the global pandemic situation. So the stock market continues to like all the stimulus and is trading on the hopes for a brighter future, more stimulus, and of course the first round of COVID-19 vaccines being administered this week. So for right now, guys, the market continues to want to melt up, and there was a lot of records set in today's trading. So stay with me for the balance of this video, and we will talk about that. The next chart that we're going to look at is for the Dow Jones Industrial Average, and the Dow was up 49 basis points today and also closed at a new all-time closing high of 30,303.37. And you can see we're closing nicely above this blue line once again. That's the 30,000 line. We dipped down below it on Monday, and on Tuesday we got back above it. Yesterday, of course, had a slightly negative day in the Dow, but today, pretty nice day, up 49 basis points, and again, a new all-time closing high on the Dow at 30,303.37. The next chart that we're going to look at is for the NASDAQ 100 ETF, the triple Qs, and the triple Q was up 65 basis points today and closed at 310.99, and that is a new all-time closing high in the triple Qs. And you can see here we've had 4 positive days in a row on the triple Qs. And the one thing to keep an eye on this one is the fact that the volume is falling as the triple Qs are rising. And that's generally not a good sign. When you see the volume falling, like I warned last week, for any of you that have watched my videos in the past, and if you are newer to the channel, welcome. But you can see here when the volume is falling, that does set us up for a potential negative situation. So we've had falling volume as the market rises. That is called a negative divergence. So just something to keep your eye on. But all the same, guys, records set all over the place today in the stock market as the market continues to melt up on stimulus and, again, the hope for a brighter future after a pretty tough 2020, at least economically. The next chart that we're going to look at is for the IWM. The IWM is the ETF that tracks the Russell 2000 Small Cap Index here in the U.S. The IWM was up 1.19% today and closed at 196.29. and that is a new all-time closing high for the Russell 2000 ETF, the IWM. And look at this run that we've had in small caps since the end of October. Man, these things have just been on fire, and this has really been the strongest area from a capitalization standpoint in the U.S. stock market since the end of October. And any of you that are longtime viewers, you know that I've been talking about the fact that the Russell 2000 small cap ETF went sideways for almost 3 years, starting at the end of 2017 until basically right here. So the fact that we now have some strength in small caps, this could bode well for obviously the balance of 2020 and on into 2021 and even 2022, because the strongest markets historically are generally led by small caps. So the fact that the small caps on a relative basis have been the strongest area of the stock market from a capitalization standpoint for the last few months, this really could be a very nice sign, guys, going forward. Do you know the level of risk in the stock market on an ongoing basis? Simple Market Signals. It's like having risk radar for the U.S. stock market. Simple Market Signals is less than $20 per month. Simple Market Signals is for financial professionals and individual investors. What is it costing you to not have this information? To get started, go to simplemarketsignals.com. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video.